I've spent the last few days deep diving into the three biggest high interest yield crypto account platforms out there. So there's Nexo, Celsius, and Blockfi. And I spent a lot of time looking at each of these platforms, trying to figure out where I was gonna put my money. And I spent so long, I thought I'd make a video on it so that you wouldn't have to spend 3 days figuring out which of these platforms is best for you. Now, while I was doing this research, I actually ran into a lot of categories and things that I hadn't thought about. So I was on Reddit forums and stuff like that, and I started to run into things that I hadn't really thought about beforehand. I was just thinking, where can I get the most money? And I kind of learned that there's more to it than just getting the most money out of it. There's security, there's customer support, all that different stuff. So in this video, we're gonna review 7 different categories. We're gonna compare them across the 3, and then we'll see which one I think is the best fit for a traditional investor. Now, the categories that we're gonna look at are rates, we're gonna look at security, we're gonna look at insurance. Okay, so we've got security of the account, but we've also got security of, are my funds secure being held by this platform? Then we're gonna look at location. I think it's really important to know where your funds are being held. And then we're gonna look at customer support. We're gonna look at know your customer, whether or not they require that you fill out all your tax information and things like that. And then lastly, we're gonna look at fees and what their different fee structures are, because some of these guys actually charge a pretty hefty amount in fees to do anything with this crypto that you're holding in their platforms. And last, I'm gonna give you 2 other options, and I really want you to stay to the end. If you're thinking of signing up for any of these 3 platforms, I would highly encourage you to stay till the end, because I'm gonna go over 2 other platforms that are in the more traditional space. Okay, so they're not really in the crypto space. And these are kind of more in the traditional banking and finance space that can also give similar yields to what we're seeing from Celsius, Nexo, and Blockfi. I think it's really important that you kind of know what your options are out there if you're looking for about a 10% return. There are places you can get this in the regular traditional banking sector as well, and you could potentially do it with less risk. So I do both, full disclosure, but I want you to know and see what your options are. So we'll talk about those 2 at the end. All right, so what are these platforms? What exactly do they do? They're very simple. All 3 of them have very simple business models. Essentially, all you do is you buy crypto coins, and each one of them have certain coins that they allow this to work in. You store them or you hold them in their platforms, right? So in Blockfi, these are some different ones that I can hold, and I can just store my Bitcoin in Blockfi, and they reward you for storing your Bitcoin or your Ethereum or USDC or whatever it is inside their platforms. And you can see right here on the right, these are different APYs that you can get. So each coin, depending on the coin that you're holding there, gets a different yield from these platforms for holding it. You don't have to do anything. All you have to do is hold it in these platforms. And their claim is that they're lending it out and stuff like that, and that's how they're making the money back for you to get these yields that you're seeing on the right here. So let's dive in and compare the 3. First off, we need to know where they're all at. We've got Celsius, which is located in England. We've got Nexo, which is located in Switzerland. And then we've got Blockfi, which is located in the United States of America. Now, if you're thinking, oh, I'm just gonna go for the US one, don't. If you've been in crypto for any amount of time, you know it's actually typically a little bit harder in the United States. We're actually gonna pause for a minute, and I'm gonna throw in a quick bit. Since I filmed this video just in the last day, then the SEC came out and they actually sued Blockfi, and I think they ended up settling for something along the lines of $100 million. And there's also a lot more restrictions that Blockfi has now after this lawsuit that make it much harder to use that platform. So that's something I just wanted to throw in and keep that in your mind. But knowing those 3 locations helps us know a few different things about these platforms. 1 is how secure are your funds, but 2, it also helps us know how much information they're gonna require from us. So for example, Nexo, I was able to just sign up and start getting rewards just using an email address. I signed up, I sent in some Bitcoin, and then I was able to start getting rewards on the Bitcoin. But with both Celsius and Blockfi, I wasn't able to do that. I had to complete a Know Your Customer or KYC, where I had to give them driver's license, social security, all of that stuff in order for me to get these yields that we're talking about on the screen here. So Nexo is the only one that didn't require me to do that up front. When I wanted to exchange funds, when I wanted to exchange Bitcoin for Ethereum, then it actually did require me to do that. But I was able to use the core service without doing any of that. So if KYC is a big issue to you, Nexo is a no-brainer winner. And by the way, guys, I do have links to all 3 of these down below. You can consider that my tip. These are affiliate links, and I make a small amount of money, and you don't lose any money when you sign up with those links down below. So that's how YouTubers make money, right? So let's dive in here. We're gonna look at the rates. That's probably why you're really here. The most important thing is obviously how much are these guys paying, but I do wanna say that it's not quite that easy. And we're gonna look at Nexo to see why it's not that easy, because 2 of these platforms do things a little bit different, and then Blockfi is very simple and does things kind of the way you're imagining it works. So in Nexo, you can see right here, it's got all these different rates that they'll pay you for storing or holding your crypto in their platform. The higher ones tend to be on stable coins like USDC, USDT, that kind of stuff. And you can see it's showing as 12% APR, which is pretty high. But you can see right here, it's got this earn in kind, earn in Nexo plus 2%. So the way that works is they'll actually pay you in Nexo. Okay, so they'll pay you in their platform's token, and for taking your payment in that way, you get an additional 2%. Or you can get paid in just additional USDC, right? If let's say you're holding USDC in there, you can do this, and it's 10% when you don't want to get paid in their platform's token. Now, me personally, I kind of want to get paid in just what I'm holding in there, so I went for the slightly lower, but what I consider a better bet in the long run, just holding the token that I want. But the other thing you need to know is that you actually can't, in the US, use the earn in Nexo, okay? So both Celsius and Nexo have that option where you can earn in their platform's token, the Celsius token or the Nexo token, and you'll get 2% about in higher rewards, but you just can't do that if you're in the US. And in other places, you have to be, I believe you have to be some sort of accredited investor, and you basically have to fill out more KYC and stuff like that for them to let you get your rewards, your additional rewards in these tokens. So let's do a quick look across at all the rates. So Blockfi is very simple. You just hold your coin and they give you additional coins. Okay, and you can see their rates. Now we'll look at kind of the stable coins here. I usually do everything in USDC. So USDC up to $40,000, you're making 9%, which is pretty good. And then 8% after $40,000. And now we're gonna compare USDC kind of just across the board. We'll look across the three different ones at that one coin because they tend to be similar ratios. You can see in Celsius, USDC gets you almost 11% if you're getting paid in their native token right here. Okay, in Celsius reward rate. So if you're not doing that, you're getting 8.5, so you're getting slightly less. So Blockfi, if you're in the US, is kind of winning out here, right? And then in Nexo, we'll do the same thing. We'll look, if you're getting USDC right here, 12% if you get paid in Nexo, so it's beating out Celsius already. If not, you can get 10% APY. So for me, Nexo so far has been the biggest winner here. Nexo doesn't require KYC to use just their base services, and they have slightly higher rates across the board. Okay, the only downer of Nexo is their customer support, and we'll kind of look at that real quick next. So if you've been in crypto for any amount of time, whether it's using just Coinbase or Binance or any of those platforms, you've come to realize how frustrating it is when the only way to get a hold of support is via some kind of email or chat, and they take 3 days to respond to you. They respond to the question, and basically it takes 30 to 60 days to resolve any sort of issue, right? And that's kind of become the norm in crypto, and it's really, really frustrating. And that's how Nexo works, right? You can go to their website if you've got a support issue and you click submit a request, and we all know kind of how that's going to pan out. It's going to take a long time to get things fixed. Now, I love the reason I love Blockfi and Celsius in this category is because they've got phone support. You can see right here, you can just call them Monday through Friday at normal business hours, and you can just speak to somebody and get the issue resolved right then, which is what most of us, I think, would prefer. And Celsius has the same thing, just a phone number on their website. Go ahead and give them a call and get it fixed. So Nexo's the winner in everything so far, except for customer support, where I think they really need to offer some kind of phone support. Next, let's move on and look at how secure your account is and how secure your funds are. Okay, and I looked across at all their security measures, and they're pretty similar. They all offer pretty much everything in terms of security, except for Nexo did not offer whitelisting. And if you're not familiar with what that is, whitelisting is just where we can create a list of addresses that we want to allow withdrawals to, and if it's not in your address book, it usually requires 48 hours or something like that before it will let a withdrawal happen. That way, if you get hacked or something, it'll take 48 hours before a hacker can actually withdraw your money. So I like whitelisting, but the fact that they all have two-factor authentication and stuff like that is okay for me. If it's a deal breaker for you, then once again, Nexo is the winner there. But let's move on to security of funds. And this is where things kind of get a little hard to figure out, because everyone seems like they're purposely being vague here, and they're kind of trying to hide exactly how secure your funds are and whether you're insured or not. And so we're gonna kind of look across the three and see how secure your funds are being held in this place. The first thing you have to know is that they're out there lending your money. Okay, so they're giving your money out to people to borrow and then pay back. They are requiring collateral from all the people that are borrowing, but you have to know that there's some risk there, right? Most people are borrowing to go buy more crypto and things like that. A massive crypto crash could potentially cause issues. Now, Nexo at least claims that they've got $375 million worth of insurance. Okay, and whether that's for a hack or for you losing your funds or something like that, $375 million, which is nowhere near the amount of money that they're holding. Okay, they're in the high billions, the amount of actual funds that they're holding. But it's nice to know that they have some insurance, because most of the time when there's hacks or things like that, only a small portion of a company's portfolio gets pulled out. Now, Celsius is a little bit different. Celsius does not have an insurance policy. And I believe what they're saying here is that your funds are not insured if a borrower doesn't repay them. Okay, so Fireblocks, you can see right here, their custodian, the person that's holding any crypto that they're holding, is insured. Fireblocks is insured for the crypto that they're holding, but most of the time they're lending out your crypto. And when they're lending out your crypto, that's not necessarily insured. Instead, it just says what we do is we require that they post up some kind of collateral so that they can take back the collateral if the funds are not repaid. And this is how all three of them do this. But it's important to note that they're not giving you any kind of insurance policy on your funds if for some reason they didn't get repaid. And then Blockfi is more similar to Celsius than it is to Nexo. I read a whole article or two they had on risk and security. Now, it's important to note that they are actually approved in the United States, okay? So they're licensed, they're regulated and things like that, which does offer a little bit of mental security, right? Makes you feel a little better knowing that they're licensed and regulated, but they still aren't insuring your funds. Okay, those funds that you're out there, that you're giving to them, that they're out there lending, are not being insured. Once again, the funds that they're holding, that they've put in these vaults or whatever, and they're having someone hold for them, which I believe is Gemini, those are insured. But most of the time your money is being lent out and things like that, and there's no absolute assurance that it will get repaid. There's just collateral that Blockfi is holding from the person that's borrowing the money. Okay, so in terms of this, I think Nexo wins, unless whitelisting is a big deal to you, which it's not for me when I have 2FA on. So I think the clear winner in this category is Nexo, who actually does offer some sort of insurance on these funds that we're putting in here. Now I want to move on to fees, and we'll be done, and we'll kind of talk about these two platforms that I promised to talk about. Fees, they all charge fees, okay? So the big issue is withdrawals. When I tried to withdraw money, there was fees, and Blockfi tried to charge me. They said you get only one withdrawal a month. So depending on how many withdrawals you're going to be taking, this could be an issue or it could not be an issue. And then the other two don't charge you at all to withdraw. All three platforms have exchanges, meaning you can switch out USDC for Bitcoin or back and forth or things like that. The exchanges have pretty high fees. All of them are somewhere between 1% and 2% from what I could see, meaning you'll lose 2% each time you make an exchange. So, that's 2 or 3 months worth of gains from these platforms. So if you do too many exchanges, you're never gonna make any gains. So pretty high fees in terms of exchanges. All right, so if you ask me, I'm looking at these three platforms, at kind of everything, the big picture. I was a much bigger fan of Nexo. I think you make more money off Nexo. I like the fact that they're insured, and I frankly don't deal with customer support very often because I don't use the platform very much, and so I don't end up having to deal with support very often. If support is a huge issue to you, and if you are a little nervous about the whole idea of this, I would go with Blockfi. So I really saw no reason to use Celsius at all. To me, that's kind of the bottom of the three. My lineup would be, I would use Nexo if support mattered to me and kind of I was nervous, Blockfi, and that's it. Now remember, there are links down below. It doesn't cost you anymore, but it makes me a little bit each time someone signs up through those. So go ahead and sign up for those if you would like to. Now we're gonna talk real quick about these other two platforms, okay, that I've been using. And I wanna show on my phone actually, because both of these work better on the phone. And the first one is called Fundrise. And what Fundrise is, it's a pretty cool idea. They go out, you give them money, you put in money, and they go out and put it into real estate projects. Typically single family homes, pretty stable real estate projects, right? Like renting single family homes tends to be a pretty stable real estate market. And you can actually see the projects that your money is invested in. So if I click on projects right here on the bottom, I can scroll through and see there's some commercial stuff, a lot of single family stuff. They're in apartment complexes, things like that. These are the things that they're buying with your money, and you can actually go out and look and even see in specific cities and states. But what I love is I started testing these guys back in August, I believe. You can see right here, the 14th of August is when I signed up. And I put in exactly $10,000 to start, just to test it out and see how it worked. And you can see it's now, as I'm putting out this video, the end of January, and it's up to $11,523, which means in about 6 months, a little less than 6 months, I think, I've turned 10,000 into 11,500, which is a 15% return. If this continues on, I'm looking at a 30% return for the year on a fairly safe investment, right? We're getting into real estate here. Now, the only downside that I could see to Fundrise, it was very easy to put my money in, and they instantly started investing it in these 4 different categories that you can see right here. But there is a withdrawal fee if you withdraw within the first 5 years of putting in your money. So Fundrise is definitely a long-term bet here, which a lot of people in crypto don't like. But so far the returns have been absolutely incredible, right? 15% is awesome, especially in kind of the traditional world right here. Now I want to move on to one that I've been testing recently, more recently. I've only signed up for this one about a week ago and been running it. It's called Titan, and they're almost a traditional like brokerish thing. You can put in money and pull out money really easily, but they invest it in both stocks, and if you allow them to, they'll invest it into crypto. So my portfolio is half stocks, half crypto, and they just invest for you, and you can pull money in and out from what I can see fairly easily without any fees that I could see on their site. I've done both and didn't run into any issues. But you can see right here, these are what they're saying returns are. You can see all-time performance since February 20th, 2018 through the end of 2021. So that was about almost 3 years. You can see they've done about 95% over 3 years. So that's an average of about almost 30% a year that they're doing. And you can see they're kind of comparing themselves to some other places that they're beating. And you can see the S&P, they barely beat the S&P 500, which had a great few years. But anyway, both of these options are really easy to use. It's just an app. I can deposit money and pull money out really easily from Titan, or I can just deposit money into Fundrise and let it sit there. And both of these get really, really good returns. I don't think they'll always get returns as good as what they're advertising here, right? But I think both of them have a lot of potential to get you something similar to what you're seeing in these Blockfi, Celsius, and Nexo platforms. And potentially you're taking on a little bit less risk depending on what your strategy is. So just know that that's an option out there, and then make your decision accordingly. And that's the end of this review. Hopefully we were able to answer any questions you might have about these 3 platforms. If you like learning crypto without all the fluff, without all the hype, without all the fake promises, then this is the channel for you. Go ahead and click subscribe, and we've got another video for you here if you'd like as well.